Oh man, my Robinhood portfolio is looking ugly. What should I do? What's up guys? Jay Graff back here again with another investing video. You all already probably know, but there has been a bloodbath this week in the stock market. The Standard & Poor's 500 is down like 7.5%, I believe. We'll go look. Yeah, so the Standard & Poor's 500 is down 7.3% this week. So I thought today would be a good opportunity to make a video about the three things I do whenever there is a dip or a drop in the stock market. So whenever the stock market takes a drop of more than 5% or so, the first thing I do is I reevaluate my investing strategy. So when I started investing, I set some goals, some guidelines that I wanted to follow, and I've done my best to stick to them up to this point. I believe a drop in the stock market is no reason to panic and sell anything or make any decisions that you wouldn't make otherwise. It's a great time to go back and revisit your strategy and maybe double check and make sure that it aligns with your personal investing goals. So me personally, I started this investing journey as a way to save for retirement. I have some money set away in an emergency fund in case something was to go wrong. And the money that I have in the stock market, I don't plan to use for at least 10 years and probably don't plan on using for 40 years. So when I think about that, it kind of helps me realize that a 7.3% drop in the stock market in 1 week is not that big of a deal. We can see here in my Robinhood portfolio, I have done slightly better than the Standard & Poor's 500. I'm only down 6.13%, but it has significantly eaten into my all-time gains. Last Robinhood update video I posted, I was up around 23%, and now, as you can see, I'm at about 16.4%. So it has been a rough week, but one thing I do want to encourage you all to do is go back and look at your investing goals. And the other thing is make sure that you aren't investing any money that you can't afford to lose. That's one of the basic tenets of investing is don't invest what you can't afford to lose. The stock market does have the potential to do things like this where it drops, 7%. And really, I'd say if you're going to invest in the stock market, you have to be comfortable with the idea that the stock market could drop up to 30% or so in a single year. So just keep that in mind. There is some risk that you take on investing in the stock market. We've had some really, really good luck over the past 10 years or so, ever since 2009, I'd say, where the market has pretty much just gone up and up and up. And anybody who started investing during that time has likely done pretty well. But keep in mind that you do always have the potential to lose money. So the second thing I like to do whenever there is a drop in the market is I like to go check the stocks that I have on my shopping list. So one thing that I like to do periodically is I make a list of stocks that I want to buy but I think are currently overpriced. So I have some companies in mind that I personally love. I think they're fantastic companies. I've done a lot of research on them, but just where their price is right now, I don't feel like they represent a good buy. So whenever there's a drop, I go back and look at that list and see, okay, has any of these stocks on my list dropped below what I would consider that buy point? So one of the stocks on my list that I would like to buy if it drops lower is Visa. I love Visa as a company. I've talked about it a lot in previous videos. But if Visa was ever to drop below 170 and there wasn't a fundamental reason why it had dropped that far, I would probably try to pick up some shares. Another great example is Waste Management. It's still trading pretty high right now, but if it was to drop below 110 or so, I would try to pick up some shares of that. So there are multiple stocks that I have researched and I think are fantastic companies and I would love to own more shares of, and I just have not purchased any because I feel like they are overpriced or appropriately priced at the moment, and I try to only buy shares when I feel like they are at a value. I've done this in the past with Pfizer. Pfizer had a drop a while ago where it was trading at around $34, $35. So I picked up some shares at that point. Now it has dropped a little bit below that, but I still think that Pfizer was a good buy at 35, and it is a great example of another stock that I'd like to pick up some more shares of if possible. One more example of a stock like this is, or actually an ETF, is this Standard & Poor's 500 high dividend, low volatility ETF. This is one of my favorite ETFs. I talk about this in the last couple of videos I've posted, but every time this drops down some, I try to pick up some shares, especially now that I have fractional shares investing on Robinhood. Even if I can only buy like a half of a share, if it drops down like it did today, I usually try to pick some shares up because this is just going to help me out in the long run, because I'm going to be getting a greater dividend yield since I'll be paying less money for the same dividend payments. So that is a big thing. Whenever the market drops, definitely look to see if there are any stocks that you want to purchase because maybe they've dropped in price. Now, one thing I will caution you on is that just because a company drops below a certain price doesn't mean that you necessarily should buy it. Now, what I mean by this is maybe something fundamentally has changed with the company. Maybe the company had a really terrible earnings report the past quarter, and they said they adjusted their future guidance downward and essentially said that the business is not doing well. Well, that might be a good time to reevaluate what your buy point is. So keep that in mind. Don't just automatically buy something because it has gone below your buying threshold. Make sure that you still do really like the company. So the next thing that I like to do whenever there is a market drop is I like to take a look at my portfolio and take a look at any sort of excessive risk that I might be taking on in my portfolio. So one of the ways I do this is I try to make sure that I do not have too much money concentrated in any one sector. So if we look through my portfolio here, we have Visa in the financial sector. We have Omega Healthcare Investors in the real estate sector. We have Waste Management, which is in the industrial sector, I believe. We have Square, which is also in the financial sector. Geo, which is a private prison. I'm not even sure what sector that would fit in. Chegg, which is kind of like educational. XLF is a financial sector ETF. Pfizer is a big pharmaceutical company. IYH, healthcare ETF. We have Verizon, a telecommunications sector company. Paychex, which is another financial services company. We have Procter & Gamble, a consumer staple. Coca-Cola, another consumer staple. ExxonMobil in the energy sector. So overall, for the most part, I feel like I'm pretty well diversified. Now, there are a few positions where I do have a lot of money in, such as Chegg. Chegg makes up about 8% of my portfolio, which even then, I'm not too worried about having 8% of my portfolio in a single stock. Another one of my bigger positions is the Standard & Poor's 500 dividend ETF, but that's comprised of a bunch of different stocks in a bunch of different sectors. So I'm not too worried about that. But overall, I would definitely take a look at your portfolio. Make sure there's not any risk that you're taking on that you don't want to take on. So what I mean by that is there are ways that you can adjust your portfolio to take on additional risk with the potential of making higher profits, or you can also adjust it so that you have less risk, but you also set yourself up to make less money when the stock market goes up. So as you can see in this portfolio, I have a lot of dividend stocks, and dividend stocks tend to be value investments, and a lot of value investments, they tend to underreact to the market's overall performance. So as I pointed out earlier today, I'm only down 6.1% on the week, where the Standard & Poor's 500 is down 7.3%. And the main reason behind this, I believe, is because I have a lot of these dividend stocks that tend to be less volatile than the overall stock market. In general, the larger the company that you own, the less volatile they'll tend to be. That's not always the case. Stocks like Google and Netflix and Amazon might tend to be a little more volatile because they're a little more on the growth side of investments rather than the value side. So that's something you all can take a look at, is just look at how your portfolio does compared to the Standard & Poor's 500, and make sure that you're happy with how correlated it is. Personally, I really like dividend stocks, which is why I own so many of them, and why my portfolio doesn't move step for step with the Standard & Poor's 500. Now, this week it's been a good thing for me, but there have been times in the past where I thought, wow, my portfolio is lagging the Standard & Poor's 500 a little bit. Maybe I should make it a little more aggressive. So there certainly is a trade-off there, and it's important just to be cognizant of that trade-off and react to it and make changes as you deem necessary. With that, I think I'm going to wrap up today's video. I just want to check in and let you all know about the things I like to do whenever there is a drop in the market. I think the biggest thing, though, is don't panic. If there's a stock that you bought and you plan to hold it forever and it dropped 5 or 10%, don't worry about it. Just don't even open the app unless there's a fundamental reason why you do not like the company anymore. Don't go and panic sell the stock. Like I said, never invest what you can't afford to lose. The stock market is inherently risky. You have the potential to make some pretty great returns, but you're also going to experience some ups and downs. Overall, the stock market has been a great investment over the past, really since its inception. So that's why I invest in it, and I'm in it for the long term. So I realize that something like this is just a short-term setback. And, even if the stock market continues to go down another 10, 20%, I would see it more as a buying opportunity rather than a negative. So I'll leave this video with that. Thank you all for watching. I will be posting my Robinhood update video this Saturday. I'll have some pretty interesting things to say about a couple different stocks that I've had my eye on. So keep your eye out for that. If you enjoyed today's video, hit that like button down below. Please subscribe to the channel. Thank you for watching, and JGraph out.